Takeaways from the Bank of India management on your screens, and they've put out an interesting target of recoveries. Remember, in this quarter, the bank has a gross NPL number of almost 50,000 crore rupees. They're saying that they're aiming for recoveries and upgradations of 17,500 crores this financial year. Mr. Reko then goes on to say that the AQR has been fully implemented in the Jan-March quarter. They're also looking at certain non-core asset sales worth 1,000 crore rupees for sale in this financial year as well, I'm guessing to shore up capital. Latha, what did you think of this massive NPA number that the bank reported and the subsequent commentary that's now coming in?
Well, it's become a pattern. Like in pharma companies, the numbers tell only half the story. The management tells you the rest half. The numbers looked bad. It was a 37% rise in gross NPAs in just 90 days. The NPAs have gone up from 36,500 crore to nearly 50,000, to be precise, 49,879 crore. And as an overall percentage, that comes to 13.07%. That's the bad news. The good news is that the overall balance sheet has shrunk, which is why the bad loans look higher than last time as well. The other clarifications are what you just mentioned. The important point is all the assets identified as bad by the Reserve Bank in what is called its AQR, Asset Quality Review, have already been identified. And then there is the promise that 17,500 crores will be achieved through recovery. They've already done about 1,000 crore recovery in the current quarter, and 17,500 matches with the tall recovery figures. Bank of Baroda said they will recover 10,000 crore next year. So there is something that these bankers are very sure of, that they will be able to recover from defaulting promoters. A third point that is that the SMA2 accounts have come down by 33% in the last 3 months. This is about the best news I've heard from any bank. Now, SMA2 is an account which does not pay interest in the first month and does not pay interest in the second month. After the third month, that is 90 days, the account becomes bad. But from 60 to 90 days, it is SMA2, which means it is an ICU and it could go into NPA. That set of accounts have come down by 33%, which means the bank has done a good job of chasing and threatening defaulting promoters to either pay up or recognize them as bad. So that seems to be the good work from the headlines. It looks like the poison is largely out. But important for investors is that 51% has been provided for. The Reserve Bank only yesterday indicated that it would like the banks to provide 70% of their bad assets in the form of provisions. So there will be a long, hard work in terms of extra provisioning that has to come. That will keep the ROE low. That will keep the retained earnings low. But fresh creation of bad news, at least, has definitely stopped, going by the statements from the management.
And that's the statement.